everyone, welcome to episode 28, my monthly series where I present to you my top dividend stock picks of the month that are designed for passive income. Today will be a special edition episode in 2 parts. So I was thinking about this for a few weeks now, everyone, and decided that because of the current market conditions that we are currently in, it would be best not to do what I usually do and just present 3 funds, right? 3 specific funds, 1 on the US market, 2 on the Canadian market. But instead do more of a general overview of both the Canadian and the US stock markets to really tell you the funds that I personally would be looking at right now as a passive income investor. And this is because the market is really having a general sell-off. Everything is on sale pretty much because of all the recession and inflation fears. So it was really hard to pinpoint 3 funds. So when the entire market is on sale, right? So instead, I'll go over some of my favorite income-oriented funds in both the Canadian market in episode 1 or part 1 and the US market in part 2. So I will also separate the funds in 2 categories. You got the core, foundation, diversified funds, and then you got the more niche, specialized, and higher risk funds as well that I would consider because of the volatility in the market right now. So right now, it's what we're going through is what I like to call a general stock market sell-off. Forget about trying to understand the reasons, everyone. Trust me, there's no point. You could go on YouTube and listen to all the experts and listen, to all the financial experts, what they have to say about what's going on and their predictions, what's coming, when's the bottom. I don't do that. I don't suggest you do that. It's a complete waste of time, in my opinion. I learned a long time ago that nobody really knows anything. That's my theory. And of course they don't, right? Stock prices are primarily based on human emotion, greed, and fear. So it's not something that's logical, right? Fear is definitely what we are seeing right now. So should you wait? When is the bottom coming? Is the worst yet to come? Should I sell everything and wait to get back in? So take a breath, everyone, relax, and just stay the course. Remember what kind of investor we are. Repeat the mantra to yourself every day. Put a note on your fridge if it helps. Do whatever it takes. We are long-term buy and hold income-focused investors who are not bothered by the day-to-day, week-to-week, month-to-month, even year-to-year fluctuations of the stock market, fluctuation of stock prices, because the market cannot be understood. It's not a logical place, and it's behaving right now exactly how it should be. Completely erratic. So thinking like this comes with time and experience, everyone. But trust me, I have been through this type of market before. And just remember, the most important thing to remember is that it's temporary. Okay, as a passive income investor, we have the amazing privilege of being relatively protected during this type of market because we will still keep getting our income every single month, no matter what. Now, is it perfect? No, of course not. There's some certain funds like split funds that stop paying, right? But that's just how they're structured. Some funds, if they're very niche, like the crypto covered call ETFs, will lower their distributions. That's also possible as well. But we are relatively safe in terms of our income. That's the whole point. That's the whole point of passive income investing. It's a very defensive strategy. So this will be a great learning experience for you, everyone. So hang tight. Let's weather the storm together. We're in this together. I am here with you. Don't worry. And let's keep it simple. Let's keep investing regularly. That is the easiest, the simplest, and in my opinion, the most efficient thing you could do as a retail investor and as a passive income investor. So whether it's by dripping, whether it's by manually reinvesting every month, kind of like what I do, you will be happy you stayed the course and you did not sell and stayed calm 1, 2, 5, 10 years from now. Trust me, the absolute worst thing you could do is panic sell, take a loss, get back in later when the stock market goes back up. That makes no sense whatsoever. You're literally handing your money to someone else. So what should you look at if you're a Canadian investor and a US investor? So this episode, I will do it in 2 episodes. So episode 1 will be the Canadian market. Episode 2 will be on the US market. So 2 separate videos. Make sure you check out both of them, especially if you're Canadian, because the US stuff could be really useful for your RRSP and Lira. Of course, we know why. There's no 15% withholding tax on any income from US listed stocks, only in the RRSP and Lira. So let's check out a few overall general foundation options, what I like to call, and a little bit more riskier niche options if you're feeling a little bit brave. Let's get to it. All right, everyone, let's check out some of the funds that I would be looking at. Let's start with Canadian listed funds. So this is for my Canadian audience, which is the biggest percentage of my audience. So we will go through what I like to call general foundation funds, diversified overall funds, and then we'll look at some more niche options together. So of course, the first three that come to mind right away are the three all-in-one covered call ETFs, two from Hamilton, one from Harvest, that hold multiple covered call ETFs and that use 25% leverage. So you have HDIV, HYLD, and of course HDIF from Harvest. So right now, these are pretty much on sale. They have great yields right now. You're looking at just under 10 for HDIV. HDIV is probably the one doing the best, or the strongest one that's holding its own the most, and it's completely understandable. It's because of what it owns. It's a lot more defensive. It's a lot more Canadian focused, right? And you have the banks in there, the Canadian 6 banks. You have energy. You have utilities, which is defensive. You have healthcare, which is defensive. You have gold, which is defensive. So it's not surprising that this is doing very, very well, but it still is on sale. This yield is outdated. It's actually a little over 9% or a little under 10%. So a really, really good yield. Then, of course, you have HYLD and HDIV. These focus more on the US market. The US market is very tech heavy, and that's why it's been lagging or suffering a little bit more compared to the Canadian market. So HYLD has the biggest yield out of all of them. I think it's at like 12.5% yield, which is absolutely incredible for an ETF that is not a split fund. I mean, this is really, really incredible. This is probably would be my number one choice right now in terms of value out of all three. But HDIF is also one to consider as well. The yield just passed 10%, and it has 5 of the best, in my opinion, Harvest ETFs, including the healthcare and the utilities one, which are defensive. But you also have American banks, technology companies, and of course that really popular brands, big brands ETF here, which is HBF. So really, really great options, everyone. So it's up to you to really analyze your portfolio, see what you're lacking more. Obviously HYLD has the biggest yield right now, but it's up to you. I love all three of these funds. Another all-in-one fund, or a good baseline fund that I think is really good in everyone's portfolio, is my favorite closed-end fund on the TSX, EIT. The only thing, so it is a little bit at a discount, it has gone down lately, except it's stayed relatively strong. Because if you look at the holdings, it tells the story why. So the yield is only at about 9.5%. So it's nothing too crazy. You'll get better yield with HYLD, HDIF. But if you really look at the sector breakdown, you will understand why right away. Look at this, 0% in technology. So this is why EIT has stayed very, very strong. Look at the three primary financials, which have been pretty good. Energy, which has been amazing, and then healthcare, which is defensive. So this is really why EIT has been staying really, really strong. So does it have a good value? Has it gone down a little bit lately? Yes, but I would say it's probably not. You're not getting your biggest bang for your buck with EIT. In terms of real estate, there is, of course, RS. RS is a great all-in-one REIT solution. It's my favorite all-in-one REIT solution. If ever you want or in the market for some real estate, keep in mind that it is trading at a little premium. So the NAV is 1366, the stock price is 14 something. So it's only trading at about a 6% premium, which is not so bad. They recently had an offering, which is always a great time to pick it up after the offering because the stock price goes down. And keep in mind, offerings are good. They are non-dilutive to the fund. I talk about it with Dean Orico in the Q&A interview I did with Middlefield Funds. Make sure to check out that interview if you haven't seen it. So if you're in the market for some real estate, you'll get over 10% yield now with RS, which is really, really good. So evaluate. If you need more real estate, now's a pretty good time to get it. In terms of GDV, so GDV is also is a split fund and is a fund that I feel is a really good overall type fund. It is trading at a significant premium. So I would maybe hold off on this one. I mean, GDV is always good to get. I have to admit, it's one of my favorite funds of all time just because it's so beautifully diversified in terms of region and sector. But you see the NAV is 1066, the year William the Conqueror conquered England. So 1066 here is what the stock price is, but the NAV is 827. So you will have to pay a premium. How do you calculate the premium, by the way, real quick? It's very easy. You take the big number divided by the small number. Sorry, that's a 7. Minus 1 times 100. That's the formula, right? Big number divided by the small number, minus 1 times 100. So it is trading at a relatively big premium, 28%. Wow, that's pretty incredible. I have to kind of do that again just to make sure. 1066 divided by 827. Yeah, it is minus 1 times 100. It's trading at a 29% premium. So I wouldn't pick up GDV right now. In terms of baseline, really your base funds, I think probably HYLD would be the best choice, but HDIF, H and HDIF, V and F are also good pickups, as well as RS if you're looking for real estate. Now, in terms of more niche stuff, riskier stuff, I've been getting a lot of questions about FFN, DF, the split funds that have stopped paying. Basically, is it a good time, a DGS of course, is it a good time to pick up DGS or some DFN? The answer is yes, it's always the best time to pick up Class A shares of a split fund when they stop paying the dividend, because that's when typically people panic and sell it and it goes down in price, which means that the net asset value, which for DGS, it's a little bit outdated. So usually Brompton does their updates at the end of the week. They haven't done it because I'm pretty sure it's because it's a holiday in Canada. So maybe Monday or Tuesday they'll update it. But as you could see, the net asset value of the Class A share is 465 and the stock price is 492. So they're very, very, very close. And that's usually what happens with split funds on the Class A shares when they go under 15. The discount becomes bigger and the NAV and the stock price get closer and closer. And then sometimes eventually it becomes into a discount. So if you compare with everyone else, right? SBC, you see the net asset value 951, but the stock price is a lot higher, 1155. Same thing for LBS. It's worth 682, but it's you got to pay 910. So this is, when split funds are paying the dividend, no problem. They usually trade at premiums. When they stop, this is when it's a great time to start picking up some shares. But keep in mind, everyone, you will have to wait to get the dividend, right? It's not like you're getting the dividend right away. But let's say you do buy DGS at 492. What would your yield be when DGS starts paying? Well, you do 120 because that's the annual dividend divided by 492 times 100. So you would be getting a whopping great yield of 24%. So there's no better time to get split funds when the Class A shares stop paying. But keep in mind, you're not going to get a dividend until the unit NAV goes over $15. This is the NAV of just the Class A, right? So you have to add $10 approximately. So the unit NAV right now is $14.65. So it's pretty close, but the Canadian stock market needs to recover a little bit before it goes over 15. Same type of story with FFN, guys and gals. Same thing, right? So if you look at the latest NAV, unfortunately, it is a little bit outdated. This is the unit NAV. It doesn't really say, I don't like Quadravest website. It's not really clear, but this is the unit NAV. So to get the NAV of just the Class A, the easiest thing you could do is remove $10 from the unit NAV, right? So it's worth about $393. And on the stock market, it's 404. So it's very, very, very close, right? So this is what I mean. This is what happens to split funds. Usually they become discounted when the Class A shares stop paying. Dividend 15.2. I'm going through some really higher risk ones here in terms of missing dividends. Same deal. Unit NAV 1466, which means the NAV of the Class A is 466. And if you look at the stock price, it's 437. So really, really close. So this is when it's a great opportunity, everyone, to buy the higher risk split funds. But like I always keep telling you, it should be a very small and niche percentage of your portfolio. You need to accept that you will miss dividends with these higher risk split funds. If not, you could always get the equivalent that's not as risky, like DFN, even though DFN is like close to 1650 unit NAV, something like that. There's less reward, obviously, but hey, 15% yield is still really high reward if you ask me. But everyone needs to make their own decision. In terms of niche stuff that's really for sale, nothing comes to my mind quicker than the purpose investments, Bitcoin and Ether yield ETF. So yes, they have been taking a beating because the price of Bitcoin and Ether have been taking a beating. This is, they're calling it, you could go on YouTube and there's a bunch of videos, they're calling it the big reset. All I could tell you is right now, if you buy BTCY, you're getting a yield of over 15%. And that's including this is on the on the reduced dividend, right? So the Bitcoin one had 7.5 cents for the last 3 months. There was a huge cut, which is obviously expected. It's at 4 cents. So with this new lower distribution, if you pick it up now, you're getting 15% yield. Same type of story with Ether. Even with the huge cut in dividend 7 cents to 2.5 cents. If you buy it now, you are booking a little bit under 15%. So I would be, Bitcoin is definitely the more stable and more mature one, but keep in mind that both Bitcoin and Ether are really, really new asset classes, very, very, very volatile. If you don't believe in crypto, a lot of people don't get them. If you do, I would say smaller position, everyone. Personally, my personal limit is 10%. So it's very, very tempting for me to get more, but I'm already at that 10%. So I got to wait until my other holdings in my portfolio gets bigger. Another niche, and by the way, I am in contact, really good news, I am in contact with Purpose Investments. I'm trying to get someone because these guys are really in Canada. They're the crypto experts, right? They're first to market with the crypto ETFs. I'm trying to book a Q&A with one of their crypto experts to ask them and really find out, get their take on what's going on. So stay tuned for that. I got you covered. In terms of the last niche ETFs I want to talk about is really the ones that focus on technology, right? So in Canada, we have 4. We have TXF. This is the most popular and probably the biggest because it's at over 500 million. Covered call ETF, which just has technology shares, very, very, very high yield. I believe it's somewhere, here it is, 12.37% yield, just technology. So technology stocks have taken a beating. Now is a great time to capitalize, not to be scared. If you don't like the quarterly dividends, if you want a little bit more consistency, you could go with HT8. That would be my second choice. This is the one from Harvest. It's a little bit lower yield at 9, and it's a little bit smaller, the fund, but it's monthly distributions. And just keep in mind that HT8 and TXF, all three are in HDIV, HYLD, and HDIV. So HDIV has HT8, the Harvest one, and HYLD has is a HDIF as well, because HDIF only has the Harvest ones, right? So HTA is an HDIF and HDIV, and TXF is one of the 7 in HYLD right here. And as you can see, it's the lowest percentage because it's the ETF that's underperforming the most. And obviously the ones that have been doing the best are the defensive ones, the healthcare and the gold. It makes complete sense. So really, really great overall options to consider, everyone. Now is a great time not to hoard money, not to wait, to really build up your your foundation. So these are the ones I would focus on. Definitely focus on the 3 all-in-one covered call ETFs here. That would be my first choice. EIT is okay. Keep in mind that it's doing relatively strong because it has no technology. It has a lot of energy. If you need real estate, it's a good time to pick up RS. You're getting over 10% yield. Yes, it is at a premium, but only about a 6% premium. GDV, I would stay away from right now, even though I think it's a key component of any income portfolio, because it's trading at a big premium. And if you're a little bit brave, you could get DGS, you could get a bit of FFN. Keep in mind, FFN is only financials, right? DGS is a mix sectors in the Canadian market. So FFN, I consider it more risky than DGS. And a comparable one to DGS would be Dividend 15.2, which is basically the same thing as DFN. But since it has more leverage, the unit NAV is lower. DFN's about 1650. This one's at 1466. But it should be updated in the next couple of days. So I would say maybe wait for the QuadraVest ones and even the Brompton ones until the NAV gets updated and make a decision from there. Besides that, for your niche funds, if you believe in Bitcoin or Ether, now is the best time to pick some up, bar none, for sure. And if you want something that's just technology, TXF, HTA. So that does it for the Canadian listed funds. Now let's cover some great baseline foundation options on the US market. And if you're in Canadian, stay with me because this is all good stuff for your RRSP or Lira account. Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the Ultimate DIY Investing Package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other. And it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right? In order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So as usual, continue to stay safe, everyone. Stay healthy and, of course, stay passive. See you next time.